stimulus and all the rest and the legislation. These median growth estimates today, do we get used to this? Sub 2% real GDP?
It doesn't feel like we're going to have to get used to it. If in a world where policy will be generous on the accommodative side, both fiscal and monetary, we're looking at dots now, but we...
Business at the Federal Reserve. I want to get to something, TK. Check this out. Go to the dot plot and the projections. And if you go to the dot plot and you look at 2025, there is a very lonely dot at the very bottom of the screen, and it's sub 3%. Not for next year, but for this year. There is a dot there, just below 3% for 2025. Now, we're all asking, and of course, when you follow those things, there are no names on the dots. You don't know who they belong to, but I think we've got a pretty good idea who this might have come from. We've been asking how aggressive Governor Biden might be. The dissent is one story. The push for a whole lot more for the year ahead.
You mean 125 basis points of rate cuts by the end of this year seems a little bit aggressive? Look, to me, that is notable, and it might be exceptional for people to hear that and absurd if you think about the growth in the economy. And yet, how much is the market trading off this? And I wonder, how much does this have disproportionate weight in the market? Because this is someone who really is coming with the backing of the president and could be some sort of signification of who he might pick next year.
I can see this picture out of the corner of my eye, so let's take this picture. And for our audience at home, I'm just going to articulate what we see on the screen right now. So you've got this lonely dot for 2025, and then in 2026 you've got this additional story to think about. This massive spread in expectations from individual policymakers of the Federal Reserve. Lisa, they've got absolutely no idea what 26 brings, what 27 brings. This is a low conviction Federal Reserve, and you've got to bear that in mind when you go into this news conference. These guys are not gods. They haven't got crystal balls. They are clueless going into next year.
We're all clueless. And when we were speaking today to some of the heads of retail banking, what we have seen is retailers themselves don't know how much they can pass along inflation, how much there will be this elasticity in terms of demand.
Greg Peters is not clueless. I'm looking at the Bloomberg Total Return Corporate Index, and it is a miracle price up and yield down. Do you predict that we will see these acclaimed indices, the Lehman Barclays, et cetera, now the Bloomberg Total Return Index, they're going to break through and go through the highs of pre-COVID? I mean, we can have a new low-yield regime that we just didn't think would occur.
I don't think so. I think that's heroic. I think the world has changed post-COVID. I think the environment of zero interest rates, negative interest rates will continue to be looked back on as a bad idea. That drove those rates to those levels. So
can we go on the edge of Myra? I guess that's the question. Can we find that dot?
I don't think you can get there without a recession, honestly. And I think it's important to remember the starting place is above neutral, right? So we're not even at the top of neutral yet.
Yeah.
So, the Fed still has room. They still can get to 4% and they're neutral, right? And so we have a long way to go. As you get much lower, though, that's where things become really quite accommodative, and I think that's a different question. So I think we're all kind of hot and bothered by this move, but the truth of the matter is we're not in neutral territory yet.
In some ways, this was the easy decision, and every decision after this gets a little bit harder. In equities right now this afternoon, equities rolling over on the S&P 500, so negative now by about 0.25%. Check out the Russell up by 1.24%. The rally for small caps continues. Bond yields still a little bit lower at the front end, lower at the long end. 30s are down by 3 basis points. 2s are down by almost 2 basis points. We've got Bob Michael at JP Morgan still with us. But I want to come back to you. You've just heard from the Federal Reserve, and I don't know what we get in the news conference, but let's just go with what they've told us so far. They're telling us we can upgrade growth, not bring down the projections for inflation, and ultimately offer you more rate cuts. How bullish does that make you as a bond investor?
Aren't they magical? It's all dependent on their policy. If they bring rates down to where they say they're going, they think they are going to cause greater growth and maintain stable inflation. Look, I think there are so many policies in flux on the fiscal side that we don't know yet. I think what we do know is that the labor market was starting to struggle by a greater degree than we all had thought, and we saw that revision and went, and it's time to start relieving some of the pressure on corporate America now.
John, it's 2:16. We've yet to mention tariffs. I find that extraordinary.
So I'm pleased you brought this up, TK, because I think still a lot of people are talking about the tariffs of April as an event and not a process. And I think it's far more important to be open-minded about the process and the potential of pass-through still to come. We know based on the data so far that we aren't seeing the exporters drop prices aggressively. You can see that in import prices. We know based on the data so far that a lot of companies domestically are absorbing this on margin.
Right.
What we don't know is whether they pass on those costs in the next several months and change this inflation picture.
Exactly. And when I look at the Excel spreadsheet from the Fed here and the sub 2% growth, my question is, are we seeing a decline in purchasing power? And that's why you see, you know, the curve coming down and yields coming down right now.
I think what we've seen, Tom, without a doubt, is that we've seen a massive step down in payrolls growth.
Yeah.
That has clearly spooked some members of this Federal Reserve. But Lisa, I think it's key to point out, not all members of this Federal Reserve. There's some members of this Fed will still be anchoring their labour market view around what's happening with unemployment, which has been pretty stable through all of this, through the whole of this summer. And look at the forecast from the Fed. They're still forecasting pretty stable unemployment, around 4.5%.
Yeah, which is the dispersion, going back to that, is the reason why I'm struggling to interpret the move in markets right now. Because is the market taking their guidance on Myron or on the idea that there are Fed officials who are pushing back and saying, actually, we need to be tighter? Right now, is this a trial balloon for what it would be if there was a Fed that was being more aggressive? Or are we not there yet? And that, I think, is going to be a tell in terms of, does the bond market behave if it believes that a Fed is willing to really prioritize growth in a significant way over inflation?
Hey, Bob, good to catch up as always. Bob Michael there of JP Morgan. Lisa, let's turn to Dan Swank of KPMG. She's standing by. Dan, welcome to the programme. So much the process here going into this news conference in about 12 minutes' time. What's your number one issue going into the presser?
Well, first of all, it's really clear that Powell corralled the cats, and I assume that Waller and Bowman did not dissent in part because of the strong retail sales data, which also revealed inequality and something else that's going on out there, and that is that spending on restaurants went up after adjusting for inflation. Spending at grocery stores actually fell after adjusting for inflation and the retail sales numbers. And so you've got this sort of, you know, the K-shaped economy we keep talking about, the bifurcation, but that masking the underlying weakness in lower and middle income households. So this was clearly an acknowledgement that yes, the labor market has weakened and they want to shore up the labor market. What surprised me as well was that we had heard the Fed talk about a reduction in what they thought the neutral rate was. Powell had referred to that there had been some discussion about that in the forecast. And I think that's important as well because they're removing restrictions. It's not just calibrating down because the neutral rate has moved down. They're trying to say, listen, we're removing some restriction, acknowledging the weakness in the labor market, want to shore up the labor market. But if you really do read this sort of through to next year with a major change in leadership at the Fed, you could have a situation where you overstimulate and get a more pernicious and self-fulfilling prophecy on the fact that consumers and firms now expect inflation to be higher. And I think what the Fed is struggling with is that consumers are also telling them in their own surveys that the job market's the worst it's been on record since 2013. That's something that has got to have startled the Fed as well.
Diane, this is without a doubt a very confusing economic time. It's also a very confusing time when it comes to the Fed's reaction function. Do you have a clear sense of how the Fed is going to prioritize incoming data, whether it's retail sales or jobless claims or whether it's the payrolls report, and decide how much to ease?
It's really hard. This is, you know, it's one thing for the Fed to have forecast the stagflationary inflation that they did since March. That's gotten more stagflationary over time. That was hard to forecast. In real time. And unfortunately, it is very hard to not. You have to shore up the labor market. That said, you don't want to remove so much accommodation that you allow these waves as these are an uneven rollout of tariffs, so it's not just one and done. And it's not all at bonds.
ولا طلع اكثر غيجيو ناس اخرين غيبداو يشريو.
Reinforces the idea that we're going to normalize inflation, which
سي كوا لو نو هاي هنايا شتيها
Fed really has to be
بيتكوين شارك
quite cognizant of that.
شتيها
And then we own the study of Michigan,
Bitcoin shark.
Chicago, and
كاينه
down
في
south
بوم
of
تاع
the
فان.
Mississippi River. The mail I get is people are flat on their back in this K-shaped economy. How does Jerome Powell
دخل
address
في
the
بوم تاع فان.
have-nots of America? They don't have AI. They
كونيكتي
don't
الواليت
have
ديالك
like
ديال
John
السولار
Cena
ديال
years ago.
سميتو
How
فونتوم
do we
واليت
do with the
ومشي
people
شرا.
that aren't participating in the system?
بارك على الناس. يلا تو ذا مون، يلا كاملين نجيو ندخلوا هنايا. اوكي اصحاب اليوتيوب كاملين يجيو يدخلوا هنا. انا غنصيفط لكم اللينك اخر مره وغنحبسوا اللايف في اليوتيوب وغنبقاو لايف دايرين لايف غير في هذا. نديروا لايف غير هنا. اوكي اوبس
relative to inflation. The rest of the economy, the bottom 80%, pretty much flatlining it since after adjusting for inflation on their spending patterns. That's a really tough
ده فينا
position to
يا
be in.
الماوس كما كاين.
The heart of what we're still dealing with is the embers of the pandemic inflation were still smoldering when you added on the tariff-induced increases in prices, and that's what's really
ما بغاش
tough
تجينا.
for the Fed to deal with and for the
ما
average
تجي منها.
American, because remember, even when the labor market was much more robust, when inflation flared, the majority of Americans believed we were in a recession because their purchasing power was eroding and they were losing ground. And I think
Oh,
that's
my
very
Jesus.
important because it really gets to the corrosive
Sorry.
nature of inflation. And at the end of the day,
Seemed
you
whole lot, no?
cannot get full employment sustained unless you really derail inflation. What we don't know is if this will just be a couple steps up and then just come off, or if it will be more
أنا نصيفط عليكم
and
هنا
that's
في
what
chat.
he's going to have to emphasize at the press conference today, is that they're going to be mindful to watch what's coming on in terms of how persistent the inflation becomes and how much inflation expectations, to get jargony, get unmoored.
NVIDIA, that's my biggest position, TK, at Hindsight Capital.
You killed it.
I wish.
You just killed it.
Dan Swank of KPMG. Dan, thank you. Appreciate it. Matt Lazzetti of Deutsche Bank standing by. Matt, welcome to the program. What an interesting forecast mix. More rate cuts in our future. Growth.
هاي صيفط عليكم عاوتاني في الشات. دخلوا ليها كاملين واجي دخلوا معنا هنا. اوكي دخلوا معنا كاملين هنايا باش غندير لكم واحد اللعيبه، واحد الكوين غنعطي لكم ما تمشي تشريوه، ولكن غنعطي لكم هنايا بوم دات فان. كلشي يجي بوم دات فان، بوم دات فان، بوم دات فان. اوكي كلشي يجي بوم دات فان. راه فينا هو هذاك اللينك اللي درنا ليه بينينا. ما بغاش يخلينا، ما كيخليوكش دير بينين حيدوه. ايوا يلا المهم مرحبا بكم هنا في البوم دات فان. يلا كمان كلشي يجي بوم دات فان ويجي يشري هذا البيتكوين، هذا الكريبتو هذا اللي سميتو بيتكوين شارك. كمان باي باي باي. وانا هنا غنعطيكم واحد العمله جديده، يلا عارفينها غير جروب ديال VIP فور ايفر، ما اللي عارفينها. ليتس جو. هasta la vista.